Midweek briefing, as usual, live analysis via all our social media, YouTube, LinkedIn, Facebook, GoToWebinar as well. So for the people from the GoToWebinar, I would really appreciate a quick feedback, guys, in regards to the audio and the visual part of the live analysis, whether you can see my screen as well. So it's a very important and packed week, as you already know, and as you already felt, maybe, especially from the dollar Swiss and oil drift yesterday and today as well. But before we move to the market, so Emily confirms that she can see me and hear me as well. Perfect. Have a nice day as well, dear. So, as I was saying, it's a very important week. Tonight we have Fed. Tomorrow midday, sorry, we have ECB. It's still earnings season. Let's not forget that. Let me just quick. Earnings season. So tomorrow after market close, we're gonna see also the Apple earnings report. Now, before we scan the market, obviously I'm gonna share. Welcome, Zoran. Welcome. So before I share the screen, I obviously sharing the screen with the GoToWebinar attendees. But before I share the screen with, before we start basically our analysis, our technical analysis, I would like to make a quick briefing in regards to what happened so far, why we've seen this big drift in oil, in dollar Swiss, dollar, a bit of a rebound in gold, and so on and so forth. I will keep oil on. This is the daily chart, just for you to see how it performed so far today. But as I said, I would like to do a quick briefing. Yes, Kuram, you cannot see me because I'm live in the other social media. So for everyone that prefers to join via YouTube, feel free. Yeah, up to you. Up to you. So, quick briefing, as I said. So, we have the beginning of the week, as you already know, JP Morgan rescuing, actually purchasing the First Republic, and that was something that bring back the banking crisis turmoil in general. It has picked the concerns in regards to stability in the market, in regards to economic slowdown, to the negative impact that the banks are having, the interest rates are having to the regional banks. So concerns over regional banks in general have remained to the upside. Okay, that was strengthened a bit overnight as well, because it came with more lenders being hit being hit by the sentiment, basically by fear. Okay, by fear by investors. So just one day after Monday was the takeover. Tuesday night, yesterday night, actually, we have seen Backwest, Western Alliance, also in a big drift in their share prices. 42% for Backwest, 27% decline for Western Alliance. So you understand that people are not feeling any kind of release in regards to the banks. But that's just on the background. What is driving the market as well, and it might be the key mover, actually, the key driver since yesterday and so far today, is obviously the anticipation of Fed. And there is something different this time. Okay, it's not just anticipation, because we have recently seen the latest, let's say, data that we have seen. jobless claims yesterday afternoon, factory orders, manufacturing PMIs on Monday. It was last week's data as well, if I remember properly. All these added to the fear of economic slowdown in US. Okay, so and they have managed to push the odds of today's announcement into a 25 points interest rate increase. And it's not only that. Now markets are expecting for another 25 next month, and a pretty hawkish commentary from Mr. Powell. Okay. So it is not only the data, obviously, but especially the manufacturing PMIs and jobless claims yesterday added a significant weighted on the sentiment, and added and increased the odds of instead of pausing the interest rates, to increase by 25 points. So there is also a lack of clarity, guys. The 25 points is what the market is currently pricing in. Okay, we can see that from actually. Sorry, you can see that from the treasury yields, but let me just find the 10-year one. Um, Let me find the 10. As we keep saying, keeping an eye on the futures, on the yields, is giving you a good indication of what the market is actually not feels. What's the expectation from the majority of the market participants. Over here, I have the 10-year treasury yields. As you have seen, we have a spike. Okay, this is the daily chart. We've seen a spike yesterday and so far today. Spike on the anticipation of 25 points, as I said. But we have a lack of clarity in general, not only from the Fed, but also from the ECB. But the Fed is on the spotlight right now. The lack of clarity and the fear, the uncertainty, can be seen in the VIX, the volatility index. So you see spike up, okay, and drift down yesterday afternoon on the US Open, where we have seen also the release of the jobless claims. So job openings yesterday added a significant uncertainty, and the lack of clarity in the policy, not only from the US, but also from Europe, and in general the global central banking sector, is what keeps the markets on its feet. Okay, so sorry. Yeah, as I said, data and the banking sector. Okay, let's not forget that First Republic is the fourth bank that it was in trouble. And as I said yesterday, for those that they were with me in another webinar, this is the second bank failure in the history of the US economy, the second major bank failure in the history of US. So things haven't stabilized, and that's very important. So treasury yields were up amid the heightened concerns. Weaker data, concerns over regional banks. So as I said, treasury yields up. That helped the gold as well, spiking higher. Is the safe haven bit. That's why gold and yen and Swiss have found a significant ground. they have gained a lot of haven bits. Okay, people were turning to safe havens ahead of the Fed. So that was one thing that I wanted to share. What else? What else? What else? I'm not sure whether I'm missing something. Uh, Nevertheless, let's start with the technical analysis, and in the meantime, I will comment from fundamental perspective as we move on uh, with our live session. So, um, okay. From the people in the GoToWebinar, feel free to add any asset that you want me to analyze. Okay. Okay, let's pound cable. Michael's the very first that commented. So we're gonna start with cable, and as usual, I'm gonna do a quick review of our daily time frame. Firstly, just for you to see all this huge positive momentum that prevails and the upwards trend, even though it looks like it's forming like a round top, but it's way too early to say something like that. So just saying, um, in a rally since March, right? A bit of a round move the last in April mainly, and so far this month. And I would like to add a regression channel on just to see. This regression channel has way too low deviation, so it doesn't satisfy. That's much better, you see. Triple fractal, hopefully you can. Just double check. Okay. Do you think that 25 rate hike by FOMC will affect some index positively? I'm afraid it's not about the actual 25 points, dear Emmanuel. Okay, so sorry, that's cable, by the way. I'm afraid it's not the actual rate hike that will affect the stock market. That could affect the stock market. I think, actually, I shouldn't say that, but by considering that the markets were already pricing in the potential 25 rate hike, and they already start pricing in the next one, another 25 before the Fed pause. Is not the 25 rate hike that it could today. If you're referring to the intraday basis, by the way, that it could shake the market this afternoon and could tumble the market. It will be the Fed conference, okay? Whether Powell will manage to give clarity, whether it will be interpreted as a hawkish commentary from him, or whether it will come a bit softer and take a bit of a more dovish side just to calm down the market. So that's why an even higher volatility is expected tonight, because there is a lack of clarity, as I said. So the focus is on the press conference rather than the rate hike. And this is not only the case this time, it's been the last few meetings, because the central bankers are keep an eye on the ongoing data, so they change their approach. Okay, in regards to the long term, Emmanuel, theoretically, and what we have seen so far the last 2 years, right? The higher the interest rates, okay, this is not S&P 500. Here we go. The higher the interest rates, right, the more the pressure, the more the pressure on the stock market. Because remember, higher interest rates imply to more expenses for the companies, so they have more expenses. I'm sorry. uh, and also during an economic recession, they need to take actions to safeguard their company, doing a lot of layoffs. They are firing people literally. So that in general, the higher the interest rates, it's bad for stocks. Okay, it has a negative correlation with stocks. Now, you mentioned will affect stock price, stock index positively. So now, in regards to the current year, okay, we've seen a recovery a bit on the U.S. major indices, okay, some recovery because the central scenario and what the central bankers have said so far is that they are near to the end of their tightening. So that, yes, has already supported stock market and stock indices. It is expected to continue supporting for the rest of the year, even next year as well, the stock indices in general and the and the individual stocks as well, because we know that we are at the peak. I mean, it's a matter of this and the next month. And if indeed they manage to see further slowdown inflation, they will pause tightening. And they mentioned that, they confirmed that by the end of the year and the latest first quarter of next year, they will start cutting rates. So this anticipation, this is something that is already, we can see the sentiment in the market changing, okay? And that, yes, it's not the 25 rate hike that will help the stock market, is the central bankers' confirmation so far, statements so far, that they will finish increase, they will stop increasing rates soon. By soon, we're saying either this month and next month, right? And they will consider cutting rates by the end of the year. So yes, this is what it could help the stock index further. Hopefully I replied to your question. Okay, if not, let me know. So we'll get back to Michael, and let's get back to pound. You see, nice smooth channel. The slope is not sharp enough, so I mean to suggest that in the long term it will continue to the upside, but there is a very significantly strong positive momentum still, way above zero, even though it is a bit higher highs, higher lows. So for the time being, the medium outlook remains positive for cable, with the upper line of this channel to be the key resistance for cable, and the bottom of it the key support. So this, if we see by seeing this, we can say that cable remains in an upward trajectory with higher lows and higher highs to be to continue. Okay, intraday now. Zoom out a bit. I will put my intraday setup 5 and 9. We had a really weak dollar since yesterday afternoon. We have a recovery of cable up to 125.32. You can see above my pivot, above the first resistance of the day, but failed to extend higher. And we have a nice pullback right now with fast moving averages flatten, right? Flatten, can you see that? Flat. Stochastic extending lower. MACD, pretty close to zero, even though it's positive. So it suggests a lack of bullish momentum. RSI at 55, so a neutral zone. So how this could be interpreted is that there is some near-term pressure to the downside for cable, even though this is expected to be limited as the asset remains well above all the moving average and above the pivot point, and by considering that the overall outlook remains positive. So yeah, this looks to be a correction, a temporary, a limited correction, unless we have any surprise. So to the downside, immediate support is on the 124.85, and the next one on the pivot point 124.70 for the day. We are in 1 hour chart here, Michael. Okay, hello. Yes, of course. Oh, wait a minute. There is another related question about cable. Which currency better pound? There is no bad or there is not a better or a worse asset, especially between those two. There are two majors. Okay, Eurodollar is the most famous one, the most liquid one, but there's nothing bad or good. Usually they move a line, they move a line because afterward their dollar crosses. But I'm not sure how you mean the better. Uh, Both major currencies for trading to make profits. Okay, it's not a matter of asset. It's a matter of you having a plan, having a strategy, a setup. Like here, I'm using some particular indicators that help me understand, help me analyze the charts. They give me trigger points. So it's a matter of having a system, a strategy to stick on it in order to give you some signals whether to enter the market and how, in which direction you're going to enter the market. And next is to do an appropriate risk management, my dear helper T-Book. If you have a strategy, you follow it, and you decide to enter the market, that is risk management. So what I mean by risk management, to decide in advance where you're gonna set your target, when you're gonna set your stop loss, what kind of size your position will be in order not to lose all of your amount, right? If something happens and if the market comes against you. So yeah, it's not a matter of asset. Definitely these two are two of the most liquid and volatile assets, liquid mainly. So if you mean it like that, yes, both of them just fine, more liquid assets. So this is what we want. But it's not that. It's not that. It's about finding a strategy, stick to it, uh, and having a plan. Okay. Dow, S&P 4-hour chart, of course. Let's start with S&P 4-hour chart. Zoom out a bit. So a nice rounding top, even though it wasn't confirmed, it's still above the neckline, as we call it, a neckline. So the asset has settled somewhere in the mid. That would be somewhere in the mid. So if I leave that solely manually, if I leave that solely on a price action matter, okay, so it's somewhere in the mid of this rally, of the latest rally that we have seen since 27th of April. Okay, somewhere in the mid. What not bothers me, but can you see how there's the small body candles that we are getting the last 3 sessions? So small body candles retesting approximately the same high, like choppy sideways. Can you see that? Can you see that? So that suggests the small body candles ranging for the last three sessions suggests that this upwards movement that we have seen since since yesterday, is there is no steam on it. There's no steam. So it suggests, there's a lack of steam over here. Um, and let me just try something. Put this vice versa. Yep. Yeah. Okay. So there is a lack of bulls over here for the time being. So uh, we still are below the 61.8 Fibonacci level, holding a floor above 50%. So ahead of the US Open today, um, uh, we need to keep an eye on a potential retest on 61.8. So I will go zoom out, go to the 1 hour chart just to see what's going on. Doji, 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 doji. So basically over here we have a ranging market, okay, lack of momentum, but considering the volatility that the US Open might cause, we could say that it could easily hit 61.8 Fibonacci level. So keep an eye on this latest high, dear Emmanuel. Now let me try with my setup as well on. Where's my? So yeah. Flat, flat, flat. Basically, we can rely on only to potential breakouts of the current range. This is it. A break higher could breach the 61.8. It's a key retracement level, so it could not easily break it, but it could easily retest it. Where's my daily? Sorry. Yeah, mark this here as well. You set 4 hour chart. MACD at 0, RSI below 50, lack of momentum. So yeah, it's what I said there, Emmanuel. There is nothing to trigger our attention right now to tell us like there is a more bullish bias than bearish bias, or there is a more bearish bias than bulls. So we need to stick on what we see, and what we see is the asset ranging. So any break of this high and this low could give a clearer view on this neutral S&P 500 in the 4 hour chart. Okay, so this is it. 41.50. If that breaks, it could breach the 40. Let me do it properly. Yeah, nice. So it could breach the with another 4 pips higher. Let me also add this little pullback. Yeah, they clash just fine. So if you need another resistance case, just a resistance level, just in case you see that 41, that the latest high has been breached and broken, then 41.67 in the next level to be seen is the confluence of 20 period moving average, our latest fractal as well, and the 61.8 Fibonacci low on this latest down leg. So this is a key retracement level to the upside in case that on the US Open we see stocks supported, okay? Yeah, 4100s remain a supported, nice floor over here, okay. Should be Dow should be something similar, yeah. Uncertainty sideways fell to extend higher. A big decline yesterday. It should be somewhere in the mid. Yeah, okay. So 38.2 below 38.2. So that suggests that there's not a lot of steam to the upside. It needs to break the 38.2 in order to imply to a move at 34 level, 34,000 territory. And for those that they are intraday traders, 33,950 territory. You mentioned 4-hour chart. Yeah, nice and smooth. 34, round number, just a breath. Oops. Nice. Round number and slightly below the 20 period moving average. I'm afraid you need to be patient, guys. But it's good to do your homework like what we do right now, just to be ready once you see a breakout of the today's ranging market, right? I reply to Emmanuel. This floor, this top breakout, you need to confirm a closure of the candle above it or a breakout. Um, Breakout, it could retest, as I said, 33,950 and 34,000. On the flip side, the bottom of the yesterday's bottom is a key support level for Dow as well. Gold, of course. Gold. I will start again with daily because we had that was a significant candle yesterday, guys. It's not only because it triggered the 2000 level. We've seen it testing again and again the 2000 level and closing above it several times the past 2 months. It's not the fact that it closed above 2000. It's also the body, the fact that we have a big, nearly full body candle, right? So that suggests a significant bullish bias. It suggests that bulls are in control, okay? And it brings the attention to April's high and 2050 territory. And that scenario backs the fundamentals as well, because uh, uh, um, because let's not forget that gold is a safe haven, right? So this uncertainty is just helping the gold. Risk aversion has spiked, helping the gold as well. But in general, gold it has been and is expected to remain in a positive outlook for the whole year. Okay, considering the fundamentals, considering the banks and etc. But also, I would like to add Magdi as well, just to show you that also technicals are supporting the rally of gold. So MACD remains positive. It had a bit of a correction. I don't know whether you can see that. It had a bit of a correction in April, but stayed above zero, held that 1970 floor that it was a key resistance for a year, and now it's converted into support. So 2070 used to be a key resistance, right? Now it has turned into a nice support, a nice floor with MACD positive, RSI positive, consecutive up fractals at the same floor, implying that this is a nice strong support level. Full body candle, strong bullish candle yesterday, breaking the latest two up fractals, closing above, way above 2000. So that brings, turns attention to 2050. That's the medium term. Okay, let's zoom in to the 1 hour chart and see that it's moving sideways. Momentum, however, in contrast with the daily chart, is way higher than zero. So there are more bulls than bears in the market, in the gold market. Obviously benefited from waning risk appetite, the unexpected rate hike by RBA, the expectation for Fed hike today, and a pretty hawkish Fed. What else? And let's not forget um, um, that the prospect the prospect actually we have a pretty weak economy, right? So the fear of a recession, which is some places in the world still the case. I mean, we have a recession, is what is supporting even further gold over here. Any correction, any pullback today, okay, any decline today, it could be just a correction, just an attempt to push the gold lower in order to buy at a lower price, buying the dip, as we say. So just for you to, so nice top over here. This is the 1 hour chart. Right now it's moving sideways, not right now, I was since last night. Sideways, key floor at 2020 was 2019 to be more precise. Key resistance, key support at 2000. Must be actually just below this, 2010, 2010, or if you prefer, use the Fibonacci level as well. So a pullback below to 2010 could come down to 2003 or even 2000. But as long as it stays above 2000, then this could be interpreted as a correction before another attempt to the upside. Okay. Yeah. What else? And look at that. We have a bullish cross over here. If I put the daily chart, nice support from the 50-day moving average. Everything looks just fine. Positive momentum remains in the medium term. So any correction, any pullback to the downside is expected to be limited. So if it breaks the 2010 low, next support at 2003 and 2000. As long as it kept above 2000, this pullback looks to be just a correction before another attempt to the upside. So it could attract more buyers, okay, at that level, just to buy the dip, to buy at the lowest price, okay. I did reply about gold and cable. Let's do euro. Let's do euro. And Emily asked about euro yen. Okay. Okay, I'll come back to you, famous. Okay. Um, I understand you're a beginner. You need to start with the very, very basics. Maybe you can join our understanding market basics webinar in the mid of this month. Register to that because you need to start from the very basics on what is my financial markets, what it moves the market, um, uh, what's a spread, what's a leverage, what is a currency pair as well, what is a quote, and what's a bid and ask price, and etc. So, but before I come back to you, famous, I want to see euro dollar and euro yen because I will ask for it. Okay, let's start with euro dollar. Okay, perfect. And okay. Let's start with the daily as usually. You can see its similarity with cable as well. Struggling though to break the 110 level. Let me clear a bit this mess. Let's start with the black template. Here we are. Nice rally, recovering all the losses that we have seen in February, but for 2, maybe 3 consecutive weeks, it failed to move above 111. Okay, but we have a nice, smooth up channel. If we connect the lows, or if you use your regression channel as well, and it needs to correct it a bit. We put 150. I think 150 could be better. Yeah, nice. Let me fix a bit. Oops. Okay, guys, and I'm gonna change the color as well. I think things are quite clear over here. Why I'm saying that? Because you can see how nicely and smoothly the pound has been supported by the 20-day moving average. So that helps you because it alerts you that, you know what, if you see the asset breaking 20-day moving average and closing below that, that's an alert. That's an alert that something changing, that this rally, that this positive this uptrend might reverse. That's not the case for the time being. Nice and smooth to the upside since the beginning of March, above in an up channel, above 20-day moving average, above 50-day moving average. Momentum, can you see MACD over here? Nice, positive, steady to the upside, well above zero. Not a significant decline, as you can see. So everything is adding to a continuation of this uptrend overall. Key resistance is the mid of the channel. So if we see, so the mid of the channel is at 110.47 today. So if I zoom down to the 4-hour chart, that if we see ahead of there is less than 12 hours ahead of the US Open. So until then, a closure, a move, a spike above it, okay? But we need a confirmed candles, close candles above it, such as this one, such as these ones. I mean, we need to see a candle closing above it. So close above it, it could retest initially the 110.7. 110.7 should be territory, and 111 somewhere here, or just to be on the safe side on the latest high, right? Um, yeah, if we see the asset extending further gains above 111, then use the trend line, the upper level of this channel, which is at 111.67, as the next potential resistance area. But there is a way, it's way higher. Now, let's see intraday what's going on. So 4 hour, so this is intraday. What I'm telling you about, this is 1 hour chart. So momentum keep rising higher, market keep rising. So more bulls are entering this rally. RSI at 67 and rising, posting higher highs. So yeah, nice. So we just need a confirmation. We just need a trigger point. We just need a breakout to suggest that it could extend higher. So to the downside, just in case that something surprises later on, it will be the latest down fractal. This is the 1 hour chart, 110.13. Let's round it up, 110.10 over here as a next support if the asset turns lower, but momentum and the technicals is supporting an extension of this rally. So obviously a dovish Fed today, it could a dovish Fed today, it could pressure. Sorry, hawkish Fed today could pressure euro dollar. Let's wait and see. Euro yen for Emily. Yen has seen a nice safe haven bits. Can you see this beauty? Yen stronger than euro, stronger against dollar, stronger against antipodians, if I'm not mistaken. A nice drift since yesterday. It's the safe haven bits, nothing more than less than that. This is the 1 hour chart from 151.65 level down to 149.64. So 200 pips decline since yesterday, sorry. And considering the further lower lows and further lower highs that we're getting, and this 1, 2, 3, 4 consecutive declines that we had in the last 4 hours, 49.26 is the next handle to be retested. Put your Fibonacci on and look at that. It looks like a okay, it's not a head and shoulders. No, it's not. So just nice. That's something that triggers my attention right now. We have a confluence of the latest swing higher with the 61.8. So these are two important resistance levels, guys, especially this one, because we could see it stop the decline here. Yeah. That could be a stop. That could be the pause of the decline. But immediate support at 149.30. Let me just be precise, 149.22. Okay. Yen, safe haven, extended gains against all the major indices. But just for those that are interested in a weekly analysis as well, don't forget Euro yen is to the upside for a long time now. I mean, it was since uh, no, sorry, what I'm talking about, more than a month. So as long as it stays above the 148 territory, a decline, this 2 days decline, it could be just a correction. Okay, so keep an eye on that one. Yeah, but we have a nice pullback over here for sure. For sure. Questions. Ooh, I did gold, I did Dow, I didn't do Nasdaq, but conditions are quite the same, I'm afraid. Ranging. So basically, guys, if the markets are ranging intraday, the fractals, the consecutive fractals, can help you identify immediate levels, entry levels, because they present support and resistance levels. So if we have a breakout to the upside above fractals, or a breakout to the downside below this consecutive floor, this consistent floor, this is an indication of a downtrend, down move, or if it's moved to the upside, limited, okay? Because this is intraday basis. This is actually, sorry, this is the daily chart. Move below this floor could breach 12,400, but momentum is still positive. So yeah, that could be limited, as I said. Yes, that's correct. Okay. Okay, Ahmed, I've seen your question. Uh, Ali, I've seen your question as well. Okay, let's go one by one. Okay, you are too many. And Zora is asking, no, Rafael is asking about Ozcat. Zora, fractals are very straightforward. Okay, I cannot go through what they are, but they can be used as resistance support levels. So and target or stop losses. So for example, the breakout, the fact that yesterday, no, it was, when was that? The fact that this candle closed above this latest up fractal, it was an indication to go long with next target, the latest two fractals, so this one or this one. While support, as a stop loss, we could use either the low of the candle, okay, or the next immediate lower fractal. So they can be, please, we have an educational video on the page, very short, 1 or 2 minutes video for fractals, but also we have webinar for fractals. Please visit our past webinar page to see fractals. They are very straightforward. One of the easiest and simple indicators. Okay, now dollar yen, dollar Swiss was like a big decline so far today, more than 1%. Look at that. Below pivot since Asia session, extended below first support, currently is testing the second support of the day, which confluence with the 200 moving average over here. So that's a nice floor. However, you can see there are some small body candles over here, but the fact that we have 1, 2, 3, 4, 5, 6 consecutive 1 hour candles bearish, and in combination with, ask about dollar yen, it was volatile. Look at that. We might seeing over here that the candles are quite small body ones, but what is interesting over here is that we have consecutive bearish candles below first support, breaching and trying to break the second support. The moving average, the 5 and 9 exponential moving average. This is the 1 hour chart. In my 1 hour chart, the green is a 5 exponential moving average, and the yellow is 9 exponential moving average. Such short, fast moving averages, exponential one, can be used in intraday basis, in intraday time frames such as 1 hour or even 30 minutes chart. Okay, so the interesting thing here is that everything agrees. What I mean, continue, keep moving lower, 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 lower. A bit of stability over here, a bit of stability over here, but not boost, not to the upside. I mean sideways. Consecutive bearish candles, even small body ones, but consecutive, extending the price lower for 6 sessions, 6 hours in a row. Moving averages, both moving averages, even the Bollinger Bands are pointing lower. They are not flat. They don't really say that, okay, no, we ran out of steam. There might be consolidation. No, they keep pointing lower. Look at that. Points lower, points lower, points lower. Bollinger's expanding lower. MACD also keeps declining. RSI, look at this beauty. Lower highs, below 20, but it doesn't show any indication. So you cannot see this, obviously, because I have the comment over tile on. Sorry. So down, 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 down. But it's not only that, it is in the oversold territory, but there is no indication about a recovery. There's no indication of a recovery. There is instead another bearish cross, suggesting that there is further sellers joining dollar yen. So for the time being, the outlook over here, the intraday outlook, the 1 hour outlook is negative. So a confirmed break of our second support, which is at 135.40, it could open the doors to 134.50. So a break of 135.40, it could breach third support at 134.60. Sorry, 60, not 50. Okay. If I zoom into the 30 minutes chart, oh, you can put actually 30 minutes chart just to monitor better, or just to spot the breakout. Okay, that's up to you. Now in the 4 hour chart, since you ask, bam, 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 1, 2, 3, 4. So actually, that's interesting. This is also the 50 period moving average in the 4 hour. Still the same conditions, guys. You can tell me, but Andrea, over here we have in the 4 hour, we have positive MACD. Yes, it's still positive, but there was a significant decline, right? Significant decline, sharp drop of stochastic, no clue of a recovery yet. So everything remains to the downside for now. Dear Otaline, if I pronounce it correctly, I don't know. Aussie Cat. Both Raphael and Otal ask about Aussie Cat. So let's shift quickly on Aussie Cat. Here we are. I'm gonna have my daily template first. Was a key, a strong candle yesterday, but there is a but in this one. Strong daily candle yesterday, but failed to break the 50-day moving average, failed to break the upper level of Bollinger's, failed to break the 2 months trend line. So by connecting the highs, Can you see that? Or even if I put my channel, that should be one. Nice and smooth. So since February, March, April, so 3 months channel, it fails. It fails to break this key resistance level. So this could be 10 by considering that RSI is at neutral level. So there is not any flat at neutral level. Can you see that? Neutral level and flatten. So let me put it on 50. MACD is negative. All this, even though there was some kind of a rise in MACD movements, but still is below zero. So all these suggest that this was temporary. Or we might have a reversal, we might see the asset extending higher, but we don't have a confirmation yet, dear Otile and dear Raphael. We need to see another strong candle today, tomorrow, by the end of the week, depends, outside the channel, above 50-day moving average, above Bollingers, if not above Bollingers, at least the Bollingers to start moving higher. We need to see a shift of MACD into the positive territory. We need more clues. For the time being, it looks to be within the channel. There is a hint of a potential reversal. Okay, there is a hint of a potential reversal to the upside. Because if we think about it, we're in a down channel, but the MACD started easing, started increasing, but there is no indication yet for taking a position to the to a long position. We need further clues. We need further confirmation. We need we need way more. Yeah, see. So yeah, so that was on Aussie yen. Now intraday. Sorry, I forgot that you might asking about the 1 hour chart. So what we have, sideways, stuck between not 90.60 and not 91. MACD flat, RSI flat. The only one that is rising is stochastic, but this is my short-term indicator, so that's just for a very short time frame, so just 30 minutes chart, etc. So no, this is not interesting, I'm afraid. The 1 hour chart is still flat, small body candle stack. Even Bollingers have flattened and they are narrow. So as long as it doesn't exit this ranging market, there is nothing interesting about it, unless if you're very short time frame trader, such as 15 minutes chart. Yes, in 15 minutes chart you can do something, but 30 and 1 hour, no. 15 minutes, rebounded, pause for 1, 2, 3, 4, 5 sessions, pause at this high over here. Still RSI flat, signal line at 0. Stochastic at 59 and a bit. There's no slope near to the upside and to the up. The slope is a bit. There's no sharp slope. No. So yeah, interesting will be what I said earlier. A confirmed breakout of the channel, the 3 months channel, the 50-day moving average, and a turn of MACD upside. That could be a confirmation of a reversal of this 3 months down channel. Let's get back to gold. Can you send your pivot point template? It's not a template, Raphael. Guys, pivot points are over here in the navigator. So what you have to do, where is my pivot point? Sorry, here it is, PTT pivot. So over here in the, So, and in the MT5, let's see the MT5 as well. Yeah, PPT pivot. So, okay, I need to, I don't know how many of you are new here or not, but um, this is a free indicator that we offer as a company, okay? I'm referring to pivots right now. Okay, two things. Someone asked about pivots. It was Rafael, and Ahmed asked about my correlation metrics index, correlation metrics uh, at expert advisor. I guess you are referring to this one, dear Ahmed, right? Guys, pivots and correlation metrics are on the website. So look at me. Give me a second. So you need to HFM.com. You need to visit our website. Sorry for that. Let's enter our website. Okay. They are free. They are for free, but you need to meet some terms and conditions. And by terms and conditions, I think like a quite low balance. You need to have a balance on your account, but it's very, very low. I don't remember how much, but it's for free. You won't be charged. That's for sure. So tools, can you see that? Premium trader tools. Okay, you click on it and go down MT4, MT5 package or whatever. Or even if you click on the very first learn more thing. So learn more, download now. You need to add your wallet ID and download the package from your My HFM area. I cannot do it now, okay? But yes, it's a package. Download it from your HFM area. If you're struggling, please ask the help of our support team or your agent. Anyway, you can. There's a live support over here. Download it. If you meet the criteria, it will be downloaded without any problem. And once you download it, close your MT4 or MT5, close it and open it again. It needs to be reset. And once you do that, you will see it over here. You see 15 indicators over here, some expert advisors over here. So you see pivot point, drag and drop. Okay, I have my pivot points. Correlation metrics, drag and drop, and I have my correlation metrics, which we can amend it in a daily basis, 5 minutes chart, 15 minutes chart, how many bars backwards you want to take it, and so forth. Okay, and that's it for the premium traders tools. Where did I there was a question of gold. Yes, let's turn back to gold. Let me keep an eye because I'm not sure whether the data are out. 6 minutes until the data. So before we close the session, I would like also to see together the employment change, the ADP. Is a very important number because we have an FP this week. Let's not forget that, okay? Can you send your pivot point template to my email? No, I cannot do that, Rafael. You need to download it. It's on the website. Please download it, okay? Where am I? Question. In your opinion, what will have to go now that it has crossed? Stay there for some time on 5 minutes. Oh my God, that's as low as a 5-minute chart, dear. This is too much for me. It's way too short. Time frame makes me very, very stressful. Okay, let's do it. But 5 minutes chart. Let me delete some indicators. Let me change my settings because for a 5 minutes chart, I need to change some of the settings. right? 5, 3, 3 for MACD. Oops, for MACD. Okay. Oop, what have I done? Oops. What have I done? 5, 3, 3. Okay. Where is it? Where is it? Oh, sorry. Sorry. That's my bad. Yeah. 3. Come on. 3. Okay. Okay. Now we are talking. Down. Let's see whether it gives me some nice reversals. Down. Down. Up. Reversal. Yeah. 533 looks just fine for a 5-minute chart in gold. MACD is at 7 over here. Okay, not bad, not too good, not too bad. I want a 20 exponential moving average in gray. Let's say gray. What's wrong with me? Oh, okay. Actually, 20 is not even necessary. I would remove it. It's way too small. We use the 5. Okay, so what we have over here, 5 minutes chart. You're right, it's been for, will stay there for some time. You stay there for, you stay above 2000 for, I don't know, since yesterday. So the 5 minutes chart is, if you, it has stayed above 2014, we could say, for quite some time. Okay, what we have over here, now a bit of a pullback, rebound, and one candle down, correction, one down, two down, fast moving average. I keep pointing lower, RSI pointing lower, MACD extending lower. So there is a sell-off. With the next support, the latest low in the 5-minute chart, the 2012.50. Yeah, there is some pressure on the 5-minute chart. I guess it's ahead of the ADP. So you need to be a bit careful, fan, because ADP is seen. Is it out? Oh God, it's out right now. Well, let me check. Come on. So that's responsible for this pressure. It was ahead of the ADP. Let's see. Come on. Hasn't been updated yet, my dear. But the break of the latest 2014, it could breach 12. Oh my God! Jesus Christ. Okay, this is five-hour chart, 5 minutes chart, but there's a big dip the last 15 this 5 minutes chart that Fan suggested. Thank you for that. It makes me a bit stressful, but my God, a big surprise on ADP, guys. A big surprise. Jesus Christ, that doesn't make things better. It makes things worse, because it means that's an upwards risk to the NFP. Jobless yesterday, job opening, sorry, yesterday showed a quite slow, a slow of the economy, but right now, let me see what Reuters is saying. ADP research says US added 296 jobs in April. That's nearly double of what was expected. Remember, a solid labor sector is not what the Fed wants. It wants to put inflation down. So we need to see a proper decline in the labor sector as well. During a recession, less and less jobs should be posted, not more. So this is adding an upwards movement to the NFP, an upside risk to the NFP of Friday. Let's see how dollar reacted. Jesus, that's a huge dip, but that's a huge, this is double reading. Okay, just to clarify something, that's the very first reaction um, of the markets on the announcement, right? So ahead of the Fed, the gold might hold the 2000 level, right? But that's definitely adding some upside risk to NFP on Friday. So it could provide a ceiling. Do you understand what I mean? Could provide a ceiling to gold. Okay. Everything depends on Fed tonight, but that's not what we were expecting for sure. It was supposed the scenario was that the jobs in US were starting to ease a bit, to go along with the potential of a recession, of a slowdown in the economy. But this is the vice versa. It was double than what expected. What the Reuters is telling me right now, I don't know. Double. That's a big surprise. And I guess dollar spiked. Where is dollar? Dollar definitely spiked. But whether it will sustain this move is what is key. So, okay, it's not a significant spike, not as much as gold. This is a 5-minute chart, 15 minutes. So it's still, yeah, it's what I said earlier. It's a surprise, indeed. But because we have the Fed tonight, the markets are holding a step backwards. They're afraid to add any positions until we have some clarity from the Fed. So okay, so it could be a spike for dollar and a drift for gold, but it looks to be it might be temporary, might quickly get back where it was ahead of the Fed. That's why you should be very careful today. There might be a lot of ups and downs on the announcements. Yeah, let me see whether I can find something. Let's see what's going on. Let me see try to find the breakdown of the ADP number. So this is the highest reading since June last year. Definitely adding some upside risk on the NFP. Okay, can you see this? No, who asked for it? It was Fan already. Before the data, I told you 2012 will be the floor. It will be the next support level. It breached it. Not only break it. This is a 5-minute chart, guys. Okay, 5-minute chart. It was for Fan because she asked for it. Not only breached it, broken it, and now it's extending below it. Breached already the 2010 that I had as a next support. So attention now is down to the pivot point. So 2004 or 2005. That's the next support for gold in a 5-minute chart right now. But this looks to be, it should be a limited move, guys. It should be just the very first reaction of the markets. As soon as the market comes down, we might see shopping, moving sideways again because we have the Fed. And we have ISM services, by the way, as well. In half an hour, less. Oh, more than an hour and a half. MACD really helps in this 5 minutes chart for sure. RSI suggests further steep to the downside in this 5 minutes chart. Nice drift, sharp drift in MACD. Yeah. 2005, the next support, and then the next key support. Oh God. Yeah. We see dollar yen. Today gold 21,000, Mohammed. I cannot tell. Today 21? No. You are referring to 90 to 80 dollars higher. That's way high. Way too high. Positive, yes, that might be the case in a matter of few days or few weeks, but that's way higher for a single day trading, single day move. Okay, so you're not wrong in regards to the positive outlook. You're not wrong for sure, but the very first handle is 2020. If it breaches that and breaks it, the next level to be watched in the medium term, because Mohammed, in contrast with Fan, he's a more of a medium and long-term trader. So the next handle will be 2070 and then the 21,000. Okay, if we see the positive momentum being sustained. What happened is dollar is positive. It was the DP, but it looks to be a bit temporary, to be honest, dear Ali. It was on the announcement. As long as Fed is not over, is not behind us, we see the dollar squeezing, remain in this area over here. We need clarity. What is the best time frame to trade with? That's up to you. Whatever makes sense to you, whatever suits your lifestyle, your personality. If you're if you like fast environments such as Fan earlier, then 5 minutes, 15 minutes scalping strategy. If that stress you out, then you might consider higher time frame to trade. 4 hour, daily, even weekly. It's something that you should find by your own forex. Go in a demo account, try different things, try different strategies, try different trading, scalping, swing trading, try day strategies, try I don't know. Okay, I cannot think about right now, but by trying different strategies, different approaches in different time frames, you will realize what it suits you. For example, if you cannot stay on your PC, mobile phone, and watching the markets for more than an hour a day, then you cannot. It's quite difficult to do a 5 minute or 15 minute chart. It requires to be constantly on there. Yeah, if you are a person that is doing that as a hobby or a second job, and you have only early in the morning to check the markets quickly, take any decisions and positions, and check it again the next day, then you should consider a day trading approach. Okay, so up to you. Thank you, Ali, for your kind words. No, I disagree with that, Walter. There are very famous traders that they are millionaires, billionaires right now. It's all about discipline, risk management, emotional control, consistency. It's like every other business, like every other job. You need to keep yourself up to date. You need to educate yourself. You need to keep ahead of the news. You need to be constantly aware what's going on. You need to have a plan. Okay, it's not easy. I'm not telling it's easy, but I disagree. There are people um, that even if you don't reach the level of these famous millionaires and billionaire traders, there are people that they're doing this for many years, and they have a constant weekly and monthly profit. They're using it as an extra money, extra income, but it needs effort. It needs effort. Cable. I think I've done cable. Yes, nice pullback. Yeah, we've seen that overall. We said remains to the upside. With and if you put your regression channel, you can see that. No, this one. Let me get back to where it was. Yeah, we are using the regression channel. The I think two. Yeah, satisfies it just fine. She's above this is daily charting cable, dear John, above 20-day moving average, currently above the midline of my channel. So that brings him to the attention the upper level of the channel. So the 25, 50, and 26, 126 level, slightly higher. So here we are. Yeah, nice and smooth. Because why that's the case? Why I'm saying something like that? Because overall, cable. This is the daily chart. Okay, so it's more in a medium term. So overall remains positive as long as it close today above the midline of the channel or remains above the 20 moving average. The positive bias is expected to continue. MACD remains well above zero, supports the asset, moving average will keep rising, so there is further positive momentum. That as long as it remains above the 20-day moving average, okay? Intraday, however, we had a pullback the last few hours. However, so let me just put the setup, the 5 and 9 setup in the 1 hour chart. You see there was a pullback returning back to the below first resistance of the day. So there is a correction. RSI 52 stochastic points lower. So that suggests that we might see further decline for the next few minutes or hours. Okay, so that brings into the attention the pivot point of the day as the next level to be retested and the low of the day at 124.60. Okay, fair enough. And Roy is saying that when you're downloading the premium tools, you don't have to close MT4, MT5. You can right click and refresh. So that might be my silly PC or something. I don't know. I'm struggling. So I always close it and open it again. I I never refresh. I don't know why. But you're absolutely right. You're absolutely right. Yeah, it was ADP, double that what was expected. So that suggests that we might see NFP surprising to the upside on Friday. This is the new methodology, which it's more accurate than the previous one. So this huge gain that we have seen today from the ADP definitely reflects a strength on the job sector in the US, something that is not desirable from the Fed. This is the opposite of what the Fed wants. So are they gonna change their statement today based on the ADP? Who knows? Who knows? Actually, this might make them even more hawkish, even more aggressive. But from the other side, if they go too long for too far, that is keep damaging the US economy. Very bizarre times, guys. Very bizarre times. We ate with the sell. Okay. Euro is getting strength from the move. It's steady for the time being, but overall, the last month, more than a month, this the dollar weakness definitely helped Euro. Good afternoon, Mohammed. Oof, I've done all these, guys. I've done Euro dollar. I haven't done dollar Swiss. Okay, I will do one more time Euro dollar, and I'll do dollar Swiss, and I will close the session. Okay. Mohammed, Euro dollar. I have it ready. Can you see this channel? This is the daily chart. First of all, can you see that it is below the midline of the channel? So this is your very first important resistance level. If we see today or even tomorrow, euro dollar managing to extend above 110.50, which is the middle line, then we could it could retest 111 territory again, because momentum is still positive. RSI nicely moving above 50 level. You see, nicely moving, holding gains above 50. So we still have a positive euro dollar in the medium term. A confirmed breakout of the middle line of the channel could bring some more gains to the upside, with the next first target area at 110.90 to 111. Further move above this ceiling could breach 111.60. That's in the middle term. Intraday right now, we have seen the rally stalled. Okay, let me put the one more chart. Yeah, stalled. So hovering around the between second resistance and first resistance of the day. Stochastic is a bit flat. It moved lower. It's moving lower right now since the beginning of the day. It's moving a bit lower. So you know what? You can add a trend line on by connecting your stochastics, the peaks of your stochastic, and you can add a line connecting the lows of the lows of RSI, or just settle it at 50. And if we see, let me just, sorry for that. I'm just trying to. So there was already a break. There was also a break over here, but the slope is a bit narrow. Okay, so keep an eye on stochastic and RSI. Obviously, on price action, for the time being, is sideways. The momentum is positive, so there's nothing for the time being indicating, except from stochastic, there's nothing indicating a pullback, dear Mohammed. So So the overall is more to the positive side than the vice versa. But a combination of a move below first resistance of the day, extension of stochastic lower, and RSI back to 50 could open the doors to 1098. But for the time being, that looks a bit unlikely. They are more to the upside than to the downside. Okay, nice smooth rally above first resistance of the day. Market is positive. RSI eased a bit, but holds 60 territory. Stochastic is the only one that corrected a bit, but still you can see the slope is not pointing low down, it's pointing flat. So yeah, there is more bulls than bears. So just keep an eye on the 110.45 level, because a breakout could breach 111, 110.90, 111. Okay. Dollar Swiss, last but not least, it had more than 1% decline today. Also drifted significantly yesterday, and I would like to show you the daily chart first, because it's not, the decline of Swiss is not something new. Okay, it's not something new, but we have a very strong support level at 88.50. Okay, overall, Swiss remains in a medium, in a negative bias. So I will put the weekly chart as well, just to show you that overall, we could see the asset returning back to 2020 lows. That's overall. It was a sharp drift, sharp decline, clear downtrend, no indication of a reversal of this long-term downtrend. That remained the case. Okay, so now intraday. Sorry. What can I say? I think it's a bit straightforward. Some consolidation, but negativities below all moving averages. Fast moving averages, as the fast moving average as well. 5 and 9. The price remains below the 5 and 9. My Bollingers in the 1 hour chart, I keep pointing lower. MACD way below zero. RSI failing to rise. Try to recover a bit, but it's flattened at 30. This stochastic rose a bit, but you can see that the slope is choppy and there is not a bullish bias. The momentum is mainly negative, yeah. So that looks just a small correction before another attempt to the downside. There is no indication of a reversal of this trend. 50 is over here, so that rise, it looks to be limited. Yeah. Okay, guys, I'm gonna call it a date. I'm already more than an hour and a half over here. Keep an eye on the news. Be very, very careful with your stop losses and targets, because the Fed comments tonight might easily kick your stop loss if you have set your stop loss too tight. ISM in an hour and a half and an hour and 20 minutes. So that's pretty much it. Okay, I'm gonna call it a day. Thank you very much for attending. Take care. Actually, it's a very volatile week. It will be today. It will be tomorrow on ECB as well. It will be on NFP on Friday as well. So consider wisely how big your position size will be in a matter of dollars, and consider to add any to open any positions after the data once the market comes down a bit. Okay, unless if you are a trader that loves trading the news, so that's up to you. Solely up to you. Thank you very much. Have a great day ahead. Bye.